Hello, everybody. Here we are again. Welcome back, Jonathan. I think that's the first time we stream this year together, isn't it? And I cannot hear you. Can you hear me?
Oh, there we go. So
There we
muted.
go. So
Sorry about that.
just now it was my interconnection. Now it was your microphone. That's
Yeah.
karma.
So we're a couple of minutes late here, but we're gonna get up and running here.
Weird. We did. How are you doing, man?
I'm
How's the
good.
start of the year been for you?
Well, I'm doing good. I feel great despite breaking my foot and having a
Man,
having a flu and all of that. I'm feeling
flu
kind of
also.
good.
Oh,
Yes,
God.
yes. It's been rather yeah. It's been a tough start to the year, definitely. But I like what the markets are doing. It's very interesting
Definitely.
movements we're getting.
And you know what they say, when you break your bones, it means you are in financial luck probably later on to make
Oh,
up for
really?
that.
I didn't
Yeah.
know about that, but
I just made that up
definitely.
just to
No,
support
okay.
you.
Nice. Well, thanks. That's great. But yeah, another thing that kind of is broken is I guess the US idea of a crypto and being Bitcoin friendly.
It's
That's absolutely what a
has
shit show.
been crazy, no, guys. If you're watching this,
Yep.
some of you know I was in Bangkok for a week for a business meeting, and in this week I thought like, what is happening here? I'm just 1 week away, and there are so many crazy things going on the market. And I think the obvious, elephant in the room is kind of this one here, the official Trump coin, which when I heard it first, I thought like, oh, that must be a joke. That must be some kind of scam. Somebody trying to siphon off Donald Trump's momentarily popularity and his inauguration at that moment. But no, it's really by Donald Trump. I don't know what it really has to do with cryptocurrency, honestly speaking, if I look at the stats. But yeah, we live somehow in a funny timeline where, in Europe here, we have all this regulation hammer slamming down on us. The latest one being the MiCA regulation, where cryptocurrency exchanges really have to identify every single wallet with a KYC thing. So you have to prove to the cryptocurrency exchange that the money that is sent to your crypto account is really coming from you. Have to prove the ownership. We have a lot of Chinese viewers here today. Again, I know ni hao, wo pangyo, and of course their cryptocurrency still being banned. And yet we have somehow in the United States a president who brings his own meme coin to the markets, earns double-digit millions of it, and then, well, it seems like it's a bit of a rug pull, as one
Yeah.
would have expected, and all the way up to what was it, like $76, $78, now trading around $35. What are your thoughts on that, man?
Well, so my thoughts on the chart here, the Trump coin, from a like there's no interest at all from me in trading this, buying this, holding this. There's no interest at all. Like I remember waking up on Saturday and really feeling like I don't know what. Like the first thing was, okay, the account was hacked, obviously, but then I quickly realized that it's not hacked. It was reposted by other big accounts. It was confirmed by his I don't know if it was his son or his nephew or something like that, but I think it was his son, right? So his son was retweeting this. And I quickly understood that, okay, this is the real deal. The incoming U.S. president, 2 days before inauguration, is launching a scam meme coin. There's no other way to put it. This has no utility, no white paper. There's nothing about this other than it's just a money grab by the president. Probably not directly by the president, probably by his sons and team around him that has been building this product. I don't know what it's called, but some World Liberty Coin or something like that, right?
Yeah.
And they're holding a bunch of different shit coins and they're just pumping their bags. And it's just I was waking up, and on Saturday, and then later, I believe on Sunday, his wife, I don't know how to pronounce it,
Melania, I think.
Melania, yeah,
Yeah.
launched a coin in her name as well.
Yeah.
And I'm like, okay, I really did feel like I don't know what to think. I was honestly almost at shock. Like very few things are surprising me in the world of crypto, but there are like two big events that really, I would say, affected me and my views on this industry, and that was FTX and
Yeah,
this. I
yeah.
think the FTX collapse and this is kind of like the same level of ridiculousness, right? It's just I don't know what to say.
Yeah, because it comes like actually both, even more of a Trump coin now from like a person or a group in a position where you would think normally, I mean, these are the guys. This is the guy who is like the leader of the, well, let's put it economically speaking, opinion building speaking, one of the most important countries in the world, if not the most important country, at least, you know, for most countries in the West. So what is China probably for the East, you know? But and he's doing something like this, and for me, it like gives a deep insight into where we stand when it comes to America and morals. Honestly speaking, might sound a little bit philosophical, but this is like money is ruling it all, money above all. I've had in the past also experiences with US companies, you know, where I always was a bit baffled when you had a problem that you got an answer like company policies like this and that. Where in Germany you would say, yeah, but the law is like this and this and that. This is in America like company policies like this and this and that. And company policy is it is right what earns us the most money. Doesn't matter the client, and this is kind of the
Yeah.
thinking we see here as well. So I'm ironically I'm working right now for my YouTube channel on a video that is going to be called something like why do the rich get richer and richer and you are left behind, to explain like what has been going on since the 80s in economic terms, and why it feels like it's getting worse and worse and worse, the shitstorm we are steering into here.
Yeah.
And yeah, this is a prime example, I think, of what I can bring there, what has happened there.
And I think it's also double prone problem here with the rich getting richer, which doesn't necessarily have to be a problem, but
Mm,
you know, the rich getting richer and the poor is kind of stuck in a financial illiterate mindset. You know,
mm,
they see that Trump is launching a coin and they invest in that meme coin with zero utility and basically zero value with a lot of money, hoping that like this is going to be you know, the next big thing or the next big, like that is that's the sort of thinking that will not make you money. It's just
yes, yeah.
it's just
Yes.
absolutely crazy. But it's very interesting. We're seeing very interesting movements. I think there's so much going on right now. We got the Trump coin
Yeah.
launching. We got, but that is just. I really wish we could have just turned back time and forgot about that. But we also
Absolutely.
have,
Yeah. Yeah, sorry, I didn't want to interrupt you. Please go on.
yeah. So we also have in the U.S. government. There's obviously happening things, and there's obviously this rumor about a Bitcoin strategic reserve. And I've been saying this for a very long time. It's
Mm.
not going to happen. It's
Yeah.
not going to happen. What will happen most likely, though, is they're going to continue to pump their bags, and their bags is mostly shit coins and altcoins. The US government is holding crypto, but it's not as much Bitcoin as you would have liked. If you look at
Yeah.
someone like the president of El Salvador, he actually invests in Bitcoin. He actually cares about the value of Bitcoin, and he's, you know, a Bitcoin person, a Bitcoin maximalist. And then you have people like Saylor writing a tweet, I believe today or yesterday, and says that he uses for the first time in a very long time, he uses the word crypto and not Bitcoin. He's saying that, you know, big changes are coming to like crypto regulation. But I'm like, you're not like you never use the word crypto. So
Yeah.
what is happening?
It's weird. Yeah, I don't know what to make of it as well. For me, it's kind of getting to a point where we see a little bit of a fragile situation, because at one point in the future, I mean, Donald Trump needs to put like action behind all of his words. And I mean, this is between you and me and you guys out there watching, like, at least from my belief, one of the things we see him doing over and over again. He says one thing, but he does another thing, you know, or he simply forgets about things. There's a reason probably that past business partners of him have said, when you're doing a deal with Donald Trump, you need a third party in the room as your witness. Otherwise, he'll just twist and turn your words or simply forget what was talked about, if it's not in its benefit, obviously. And this is scary that we are dealing with a person like this in such a position of power. Independent of this, though, of course, still we have things going on a technical scale, on a macroeconomic scale, on a sentiment scale with the big cryptocurrencies out there. Obviously, I mean something like Bitcoin, I mean Ethereum, I mean Solana. Ethereum, Solana, also very interesting. I think the developments we are seeing there at the moment, we can have a look at that later. By the way, if you have some time later, I would be super interested also in hearing your outlook for 2025, Jonathan. If we don't do that today, we can also do that next time and have like a special on that, because probably that will take a little bit longer than like 10 minutes to talk about. And so I would like I would like to start to look a little bit about what's currently going on in Bitcoin, what is kind of my take, my plan going forward, because the plot, in my opinion, is really thickening. I've said it over and over again when looking at this chart, that somewhere between late October 2024 and latest mid-February 2025, we should see this breakout here in the logarithmic regression into this black channel here, where we eventually top out at the red channel. We have mid of February approaching quite fast now. So, if it's going to happen, probably it's kind of now or never, because if history repeats itself, we should see the top of this cycle, of this bull market cycle, somewhere between late April 2025 and somewhere probably in late October of 2025, where we then top out. So when Bitcoin then continues again to go into this 1 year of severe bear market, if this repeats itself, and I don't see any reason why it shouldn't repeat itself, at least for the moment. So something's gotta happening, in my opinion, within the next three weeks, and we see a lot of upside momentum in Bitcoin. Here, if I look here at the daily chart with a weekly market support bands, again we see the see Bitcoin trying to break over, let's say, the 110,000. Ironically, the 110,000 is really the top of this green channel here also. So maybe we are like being rejected there for a reason at the moment. But if it wants to happen, it has to happen now. What helped beautifully again was the 8 weeks moving average. I think like 2 weeks ago, I did a video about this, why this one is always a great method in the super bull market to invest. We're seeing the same here in the S&P 500, where I told you guys on my last video, we're hitting the bull market support bands here. This, if the bull market continues, is a great moment to invest again. And again, we weren't deflected off it. So this is a pattern where you don't need like big analytical scales for. That is, has almost a 100% chance of being successful. So what we now need to see, and I would really like to hear your twist on this as well, is in order to be able to really reach 125, 150, 160, maybe 200,000 US dollars still this year in this bull cycle, not in 4 years. We need to see a breakout here over the last all-time high, a good breakout. So something like where we see like a pull through to maybe 112, 113,000, maybe then a little bit of a pull back to test this last all-time high again, and then it take off. This needs to happen, in my opinion, maybe not necessarily within the next three weeks. Of course, when I talk about what happened in the past, how would that translate to the future? There's always a margin of error. You cannot pinpoint it to the day. So you have like a time window for this happening. But I think this time window is slowly closing. If it wants to happen, it should happen really within, let's say, at least the next month to longest 2 months. Otherwise, I would slowly get more skeptic, honestly speaking, if maybe we've seen the best of a bull market already, and this decaying alpha effect that we see every cycle. The percentage gain from low to high in the bull market is getting lower, simply due to the fact that when Bitcoin had a market cap of $1 million, it's easier to go to 10 millions. Going from a trillion to 10 trillion is a whole nother story. You need a lot more money, a lot more demand, obviously, for this, maybe even more demand than we are currently seeing with the Bitcoin spot ETFs. What's your take on that at the moment, Jonathan?
Yeah, so we have to, my expertise is in like long-term technical analysis, looking at the bigger moves, the swing moves, and specifically in the forex market. But it's all connected. The forex market move based on the things like the credit cycle, the interest rates and all of that. And Bitcoin, of course, moves within the same cycle as the S&P 500 and basically all financial markets. So what we've seen over the last few months is a move on a strength in the US dollar, while we also at the same time are seeing a strength in the in equities or in risk on. So basically
which is weird, no? This is normally something that shouldn't be happening.
It is quite weird. It is quite weird. We saw, risk on environment with a bearish Euro USD. We saw the dollar reach highs that we haven't seen in a very long time, and the S&P 500 at the same time reaching all-time highs multiple times during that move. And of course, I believe that this is because the market is pricing in. It's a discounting machine, right? And it's pricing in what they think will happen in the future. Now, the beautiful thing with technical analysis is we don't really have to care about that. We don't have to care about the timing of that. We don't have to care about what's really going on. All we have to care about is really the structure of the price, because I believe that you'll find all this information in the structure of price. But we saw that the USD got strong because of Donald Trump and the possible effects of tariffs. People were pricing in what they thought will happen during the Donald Trump presidency. And the dollar, if we look at the dollar currency index here, we saw that it spiked quite aggressively to the upside. And now what we're seeing here, especially on the daily, is, of course, a quite clear break of structure. Yes, we are coming down to a support level right here, but still, this is a break of structure. You can also look at the 4-hour. This is obviously quite bearish developments. Now, of course, if we start breaking down that level, then that would be even more bearish. But what's not happening here is, of course, we're not seeing the equities pull back. So we're not seeing the S&P 500 pull back. We're actually seeing the S&P 500 continuing to rally, and that's because I believe that. Can go back to the S&P 500 here. I believe that's because the dollar strengthened because of Trump, but the equities also strengthened because of people pricing in a strong U.S. market. What happened now was there was coming out some news on the tariffs not being as aggressive as people initially thought, so that the USD is not pulling back because of that, but the equities still remain strong because obviously we're still in a bull market. So what I'm seeing right now is I'm seeing very clear signs, and I have quite a lot of positions here. I will show you, for example, I have my position on Euro USD where we got in on the structure break. This is a trade that I've been waiting for ever since that we shorted the election of Donald Trump. And I do see now that this is on a daily, right? And we have a very clear break of structure to the upside. So I do think that we are now seeing the move that we're seeing a shift in the market. We're seeing Euro USD possibly changing its high time frame structure, and if we're, there is a possibility of even seeing a 1,000 pip from the lows. 1,000 pip move will be up to that range highs. That is likely in the next coming months, I would say, because I do think we have a clear structure break across all most forex pairs here. You can look at Euro USD where I have a long position. We got GBP USD where we also have that, I believe, structure break. USD CHF is another short position I have where I see that we've reached the highest right here, and I do think we're going to come lower down to at least range EQ, or even lower down to range lows in the next coming months. So what is this telling us? Well, this is telling us that we're seeing a clear structure break. And the issue I'm having with this in regards to Bitcoin is the fact that, yes, I do believe that we will initially see a push to the upside on risk assets like the S&P 500 stocks, and Bitcoin, but it's not going to be uh, be for the long run. We are definitely much closer to the top than we are ever than we are close to the bottom, right? And if you
Mm.
look at I believe that we're also at the the end of expansion phase in a credit cycle, and we've
Yeah.
talked about this. We've talked about the yield spread as well. We have now uninverted, and typically after uninversion, you'll have a recession within 6 to 12 months or something like that.
That is so interesting that you mentioned that. This is exactly what I said in my forecast as well. We're coming out of, by the way, the longest yield inversion I've ever seen in my life.
Yep.
We had 2.5 years, I think more than 2.5 years of yield inversion. And typically 6 to 12 months after this, you'll see a recession hitting, which would put us then in this time window somewhere between August and end of a year, where I also said I think there's like trouble brewing on the horizon, that we are going to see the markets potentially taking a gear back. I'm not saying we're going to totally collapse, there's going to be Armageddon, but like at least a year of bear market. We've seen that after every president. After a year, we have the Bitcoin cycle topping around there, and we have a yield curve that's has uninverted itself. That's kind of, I'm not going to say back to normal, but back to what looks more healthy.
Yeah, and I believe the current credit cycle that we are in, I believe that the bottom of that cycle was after the 2008 financial crash.
Yeah.
So I do believe that we might have been, this credit cycle is probably because I don't view COVID as a credit cycle crash. I mean, that is a black swan event, I believe, and it's not part of that overall cycle. It's just a black swan event, right? Just like the 2008. But I do believe that 2008 crash was caused mostly of effects of the credit cycle, with the housing bubble. But that was not what happened with COVID. On the other hand, though, we've seen what happened after COVID with the printing of money. But I do think that it's very interesting that we are now seeing a correlation between the possible recession with the top in Bitcoin. We don't see that a lot of time. Like the last time we had a top in Bitcoin, that was followed by a bear market. Now, bear market and recession is two different things. But now we're actually seeing a possible bear market for Bitcoin, while at the same time possibly seeing a global financial market recession. And if you think about it, I believe that recession should probably come in Europe before America, because America is very strong now. Everyone loves the US dollar. Everyone loves America. Everyone loves Trump. Like, it's just everyone wants to invest in the US. But the European market is bleeding. You look at, I believe it was Germany where you've had two consecutive declines in growth in the economy,
which is, by the way, also already the definition of a recession. 2 quarters of lower GDP.
Yeah, I think it was GDP. I think that was it. And everyone's like, I'm like, guys, do you not see what's happening here? Like, the writing's on the wall. You see, we had, it's lining up. Now you better make money on this last move, because if you're not in cash, if you don't have any cash to buy back after this crash happens, you're going to be left on the sidelines. Like, a lot of people, just like I did back in 2017, is probably going to be sidelines and saying like, oh, this is just a dip, but it's really lining up to be I would view it as it's lining up to be a very good opportunity to buy the bottom on Bitcoin if you did not get it in this cycle, because we have a lot of new people here saying like, is this a good time to buy Bitcoin? And I'm sorry, probably got to be a bit careful around this time.
I agree, and I mean that's always the difficult thing. No matter if we're talking about long-term investment, like those 4-year cycles of investment in Bitcoin and stocks, or if we're talking about swing trading or scalping, entering the trade is the easy part. Taking your money off the table is difficult, and in my opinion, it gets more difficult the deeper in profit you are, because you're going to feel smarter first of all. You're going to kind of feel like a financial genius at one point, and you're very much going to be afraid of, if I start selling now, what if it goes even higher? What if we see this final blow off top to 200, 300, 500,000, $1 million? I mean, those are like the things nowadays, even from more official sources like investment banks being put out there. And so it's, of course, having this thought, you're afraid of missing out, but you have to look at it in a different way. So at least the way I look at it was like, okay, I got in between 16 and a half and 30,000 with a majority of my Bitcoin position. I started selling now in December, you remember this, at 93,000 US dollars, and said, I'm going to sell every month a portion now, because I don't know when exactly the top is going to be. But at this point, I'm pretty sure that I probably captured something between 60 and 90% of the whole uptrend, which is amazing. If you would do that on a 1-minute chart, and you say like, hey, look at this, today I saw like the uptrend and I captured 70% of it, everybody would tell you, well done. Of course you cannot know where the bottom is here, of course you cannot know where the top is, but somehow people think when it comes to longer term investment they can know that. You cannot. You can just estimate that. And I cannot highlight enough what Jonathan just said. For me, this year is going to be about slowly cashing out, and then having the cash ready when really this downturn comes, when we see really a year or maybe 1.5 year, or maybe even just half year of declining stock markets, of declining Bitcoin price, of declining crypto prices in general, to then have the ammunition in my pockets again to invest again in the market again. Then to invest, I know that already. If we fast forward a year from now, or maybe 1.5 years from now, we are going to sit here and we're going to tell people, I think it's time to slowly start buying Bitcoin again. And everybody will say, no, this is not the low. We are at, I don't know, 40,000. It's going to fall to 20,000 or stuff like this, wherever we are going to be trading then. It's like, it's rinse and repeat really every cycle. And this is one of the fundamental things for me. If you want to become successful, not as a trader, so we're not talking about scalping here or even swing trading, but if you really want this long-term success from your investments, you gotta be brave. You gotta you gotta be brave to take your profits. Not talking about, I made like 5% or 10% profits. If you have like 200, 300, 500x, you have to be brave. You have to take some profits. Not saying like, everything at once, but slowly scale yourself out of a market, even if everybody else is saying at that precise moment, oh, don't do that. It's going higher. It's going higher. And then when it comes crashing, you need to be the first one again, that is willing to buy into the crash. And it's to be expected then that probably the first buys are also going to be too high, that it continues to crashing. But that's normal. But this is how you earn money. This is also, by the way, how somebody like Warren Buffett earns money. I mean, let's look at 2008 again. In the aftermath of 2008, what did Warren Buffett buy? He bought stocks of investment banks like Goldman Sachs. He became one of the majority stakeholders of Goldman Sachs because he said, I saw the opportunity. The business model is still working. They are getting subsidized by the government so they can survive. So why not buy this? There are some of the smartest people in the world working there. It's a bargain at the moment. And he was right about it. While everybody else, including myself back then in 2008, by the way, was saying like, no, the world is going to end. I don't know, bury your money, exchange it in gold or whatever, And this is really the hard truth to learn, I have to say. It's hard, it's not fun, and it's painful sometimes to go against what the majority of peoples are thinking. It's really painful because your opinion is going to be different from the opinion of a lot of smart people out there. A lot of people that are smarter than me, than you, than everybody here probably.
I think it's also important to remember that we have to differentiate between trading and investing. I would say that what I'm doing now and what I've been, transitioning into here is more, I want to call it swing trading, but it's more of investing. It's
You
it's
have
more,
changed so much over the last year, really. It's
yeah,
like
I
I
really have. And
I started especially noticing that when you with your analysis of this euro dollar short trade of a dollar long trade after Trump. It's really when I thought like, oh man, he's like slowly turning into a more fundamental trader. Nice.
yeah, but not only that. It's not that I'm turning into a fundamental trader. Specifically, it's more that I'm turning into a trader that is looking at cycles. Looking
Mm,
at what are the big moves, and I'm not really super interested in specifically what is driving the moves, but I'm trying to understand where does technical analysis fit in a
mm,
macro perspective, and it gives such a clarity. It gives a sort of like you get away um from the trading part, and I gotta say, uh the failure rate when it comes to trading, like, it's very high. I mean, there's numbers saying like 90, it's probably above 99% of people that try to become long-term successful in trading. I mean, when I say long-term, I say 5 to 10 years. I'm talking
yep.
about six years of profit. I'm saying long, like, be profitable trader for the rest of your life. That is like such a small chance that you'll be able to make it if you're trading in other lower time frames, you're building a system, whatever. But if you're looking at the bigger moves, the cycle in the market, if you're investing, that is actually much more simpler, because you will
Ironically,
understand
yeah.
that, yeah, it is so much simpler. Because you think about it, like at the lows, like if Bitcoin would be crashing down to 20K, everyone would be talking about Bitcoin is dead, it's going to zero. And then people like you and me, we buy because we know that the market is driven by that exact thing, So we buy when nobody wants Bitcoin, and we sell when everyone wants Bitcoin. And in my head, it's like, yeah, it's so simple, because if everyone wants Bitcoin, if everyone has already bought, there's no buyers. If everyone's selling and everyone has already sold and no one owns Bitcoin, there's no sellers.
Mm,
It's simple, right? And then you look at things like, you have on Euro USD here. I could go into the 1 hour, and I could be looking at this exact same thing, right, on the 1 hour. But what we know when it comes to technical analysis and the lower time frames, and I'm referring to the 1 hour here as the lower time frame, it's it's much easier to manipulate price action. And when I say manipulate, I don't mean like there's some guy, giving orders and manipulating. I'm talking about news and things like that, moving price. But if you zoom out to the weekly or the daily, then you'll see that it's all about the current cycle. Positive news that align with the cycle will increase the move of that cycle, and news that does not align with the cycle, if we get enough of that news, we might see a shift into a new paradigm shift, a new cycle in the markets, and that will be seen as a shift and a change of structure on the high time frames. And you will never see that the primary trend or the high time frame trend. It's impossible to manipulate that, because that is based on the every market participant's emotions, right, and not the particular news events. So zooming out and having more of a broader view, and looking at more of an investment type of trading style is going to increase your success rate, I believe, quite a lot. and and
Absolutely, yeah.
and, and also remember that I've been thinking about this a lot lately, because I do help people within my community, and I have students that I try to help to really become better traders. But I've been thinking about this quite a lot. Like, if you're trying to help someone to become a trader, like, let's say they want to become a full-time trader, and you want to help them reach that goal. But what if there's no progress at all in 1 year? There's no progress at all in 1 year, and you know that the chances of success is very, very slim. At that point, at like 1 or 2 years, at that point, you really have to think about, other opportunities. Do you really want to continue down this route? Do you really want to waste more years of your life trying to become a trader when you know it's the most difficult thing in the world? There's much more easier ways of making money, and I don't believe trading is for everyone, particularly like low time frame trading. It's not for me. Like I could be trying this for a very long time. I know that the success that I've had with low time frame trading, I would probably be more successful if I would have just stuck to the higher time frames, right? Because I look at my
So
yeah.
sorry, Jonan, may I very quickly just interrupt you,
Yes.
because I know some people here from my trading community are also watching. You might have seen that yourself. We just had a buy alert here for PopCat on our short-term trading system here. So this one down here. So just to let you know, I'm going long now in PopCat as well at this minute, buying
Nice.
here on the 100K account for 10K, so with a very low leverage. Sorry, yeah, because I promised to the community I'm going to update live here on the video. Handing it back to you now.
Definitely.
Sorry.
Very, very interesting to see those trades, and you're trading those based on signals, and I believe if you have the right type of personality and the right type of mentality, then trading intraday trading, day trading can be like the perfect thing for you. But I believe that you have to have a specific type of personality and mentality to really make it with that type of trading. But what I'm doing right now is zooming out, focusing on the high time frames, and I'm also started developing algorithm, like quite advanced algorithm that will replace that need that I have to trade the lower time frames or more intraday trading, because it removes the emotions. And the thing with algorithms is you have to know when to shut it off and to have it running.
That's exactly the point, and I'm not a big fan of automated trading, honestly speaking, because it tends to work in one market phase. It tends to work not in another market phase. We had an example last week when this whole Trump thing was going on. I said in the short-term trading group, I said, like, guys, I don't know how to handle this market at the moment, so I'm not going to trade. There's something going on I've not seen before. I defies my logic at the moment. I'm not going to trade. If you then have like an algorithm that is like just basically executing if-then orders, so to say, if-then logic, it's going to have a very difficult time because market structure changes. And I think this is the element that a human can bring in there, knowing, like, this comes, of course, with experience. When is a good market phase to trade right now? When is the market a bit weird? When is something going on that you cannot quite understand, and then having the discipline of refraining from trading at that precise moment. And I think trading on the lower time frame is also emotionally very difficult. I see this with myself. I tend to make more mistakes on the lower time frames than I do on the higher time frames, especially long term. This is also why I have like 95% of my portfolio long term. The rest 5% swing trading, a bit of intraday trading, which is fine, but it doesn't put such an high emotionally strain onto me. You saw that just now, 100K account. I have a position size of 10K. That's okay. If that one goes against me now, I still have ammunition to add to the position. Then I usually have like a global stop loss installed, saying like, okay, if the day really goes down by 2 or 3%, I'm just going to close everything intraday trading wise, and I'm going to walk away from the market. And so this is another thing, leverage. Like people asking, like, oh, what leverage are you using? Well, 10K on a 100K account is like 10, not even 1.0 leverage. But why? Why don't you trade like, or I'm only trading with 20 or 50x leverage? I said, yeah, but
leverage. It's a weird question, because
it's a
leverage,
tool, no? Yeah.
Yeah.
Even if you say like I'm trading with 50x leverage, that doesn't mean like that you're really trading with leverage. You could like put on your brokerage account 50x leverage, and still I have 20x leverage actually on this account, but I'm still just trading with 10K on a 100K account. So the real leverage I'm using in comparison to my account size is only 0.1.
I believe the real question is like why, if you're asking if you're asking about leverage, like why do you care? Why do you care what leverage is being used?
Mm,
Because I feel like that question shows me that you have not understood a fundamental part of what trading is. And if you have to ask someone what leverage they're using, then you have to get back to the desk and you have to study what trading is all about, because leverage does not matter. Leverage is just a way for you to either have bigger or smaller position size, but the risk of that position is going to be the same regardless if you
yeah.
have 1-to-1 or 100-to-1 leverage. Like the question makes no sense, because it's like the real question is, you know, how much are you risking on this trade? Then you get the answer. I'm risking 10. I'm risking 1% of my account on this trade. Then it's up to you to use whatever leverage you want to
Mm,
make sure that you're in with those risk parameters. But you said something very important. You said that it's very mentally draining to be a day trader and trading. And I think people don't realize how difficult this can be. Last year, I so at the beginning of this year, I went through my journal, my personal journal from last year, and I saw that almost every single day there was something. I was mentioning something related to trading and stress. So I read that. I'm
mm,
like,
mm,
this cannot be healthy long term. This is not a good thing. I'm not supposed to be, I'm not supposed to be stressed every single day to make money. Okay, so and then I looked at my long-term investment portfolio, and it's like I made just only a little bit more from my day trading account than I did with my like long-term investment
mm,
portfolio. And I'm like, okay, so that I did on my long-term investment, I did nothing, basically nothing, and I made almost the same amount of money as I did from my trading account. So I said to myself, okay, what do I like doing? Like what type of work would make me less stressed? And I looked at the results and I said, okay, I like doing analysis. That's what I love about this. I don't love the fast paced action of day trading. I don't love the adrenaline and the stress that comes with it. I love looking at cycles, looking at trends, like here for on GBP and CD, for example. I mean, I love how the markets look on the weekly and the daily, and
mm,
I love the idea of getting in on these moves and then holding it regardless of news or whatever that's happening. Right? I love
yeah.
that idea, and that's the type of analysis that I love doing. So the decision I made this year was basically to um, say to myself, like, I'm not going to be actively trading. I need to follow the money and I need to follow what I feel is best. And it's it gave me a sense of peace and a feeling of getting a lot of weight off my shoulders, honestly,
Absolutely
it's
understandable. Yeah.
because one full year of drawdown after being like profitable for a long time, and then you have like a long full year of like minimum profit and drawdown. That's like you gotta think, is it you gotta focus on what's really worth it for you, I believe.
Exactly. Yeah. And I mean, you always need to compare your short-term trading results also to buy and hold. If I
Yeah.
just would have bought or maybe shorted if you are trading on the downside more, but usually you should compare to buy and hold. Did I really make alpha in comparison to if I just would have bought and held onto the position? And most of the time, the answer is no. And I actually had this question in the community a couple of weeks ago where somebody said, I feel like so stressed. I stare at the charts like for 5 hours until I can finally get out of a position again, or I see a good moment to enter a position. And I said, yeah, but if it stresses you so, then don't do it. Have like certain times where you tell yourself, okay, now for the next 2 hours or today, full day, maybe I'm going, or I do that 2 or 3 times a week. I'm going to trade. And if I'm not in this time window where I told myself this is where I'm going to trade, when I'm going to trade, I'm just not going to trade. Yeah, but when I'm
Yeah.
going to miss a lot of opportunities, but this is always going to be the case. You're always going to miss opportunities. Even if you're long-term invested, there are always plenty of opportunities that are missed. But the good thing about the market is every day you have new opportunities. It's not like one opportunity arises and then never again. There are new things popping up left and right, no matter if long or short term, every day. And for me, you said that you like to analyze the market. It's really like this. It's like this awesome big puzzle, and sometimes you find a puzzle piece that fits into the picture and that supposedly nobody else or very little people up to that point have found you. So you go in. This is where your alpha is, and then suddenly everybody else notices this as well, and the market starts moving into your direction.
Exactly.
This is like what
I love that feeling.
satisfies me, like
Yeah.
seeing like, oh, I have a different opinion actually than most of the people at the moment. Example for me was like 3 years ago when I said inflation starts coming down, you need to invest in stocks now. When we ticked down from 9.4%, and most people were like,
right. I
no,
remember that.
there's a recession coming, you cannot do this now. And like 3 years later, I'm like, that was the best decision of my life, one of the best trades, long-term trades I ever did in my life. And it's mentally hard, of course, if you're reading something from a popular, very smart Harvard-trained economist that says like the stock markets, they are going to crash, and you sit there questioning yourself like, my God, this guy is like 5 times as smart as you are, probably. Maybe is he right? But then again, I have to think, okay, who are the worst traders and investors? Usually economists. Because
that's right.
That's the thing about the market. Just because you are smart doesn't mean you're going to be successful as a trader or investor. Because I mean, you said it yourself, the markets are trading the future and not what is happening right now.
Yeah, and I also think, in as we know in this industry, it's much easier to sell the idea of trading than there is to be a profitable trader. And I think this is something that is not talked a lot about in our industry. I mean, you go onto Twitter, and then with the idea in the back of your head, like, if you're going to be let's think about it. Okay, so the failure rate for day trading, and I do have some insights into this, and I would like to say that it's the failure rate is higher than people think.
Yeah.
So you go to Twitter and you think, okay, 99% of everyone on here is unprofitable. It doesn't seem like that. It does not seem like that. Everyone's making money. Everyone's happy. Everyone's a millionaire. Everyone's selling their courses on how to make millions and be happy and be millionaires. Like, it's like, you gotta understand, like, most people in this industry are not making money long term. And when I say long term, I don't mean be profitable for 6 months. Everyone can be profitable for 3 or 6 months in trading. You just have to be on the right side of the statistics long enough. But then if you look at 5 years or 10 years, most of these big accounts, they're going to be gone. They're going to be gone. And I feel like you got to be careful. Got to be really careful in this industry if you want to make it long term.
So one thing you mentioned earlier, the junction between the fundamental analysis and technical analysis.
Yeah.
And by the way, I need to add to my PopCut position here a little bit again. There's just another alarm that trigger 10K. Good. Here we go. And there's like a very good example for this, in my opinion. Where do I have it? Give me one here, this one. So if you look at euro dollar, so we see here, obviously, on the night where Donald Trump was elected, I think it was the 5th of November, if I'm not mistaken, we had this big candle with dollar strength. We went all the way down here from 109 and a couple of pips to 107, and then this continued to the downside. Obviously triggered, by Trump talking about tariffs, and Trump being a very pro-strong US dollar kind of guy, plus the analysis that you made, like how did the dollar behave the last time after Trump was elected, which kind of was the same pattern, if I understood you correctly back then. And for me here, the this is like something, a move you cannot just with technical analysis anticipate. This candle here, it's impossible to anticipate this just with technical analysis, because the reason this happens was obviously the election, so a fundamental reason. However, what is interesting now is what followed up after this movement. And if you go like all the way, if you zoom all the way out, and you just have a look here with a simple FIB tool from the very top of euro US dollar. So when we had a rather weak US dollar, and you connect it to the very bottom where we bottomed out here at almost 0.95 in 2000, late 2022. If you zoom in here a little bit, you see that the pullback after this move was exactly here at the 0.38 Fibonacci level. And this is, at least long term, I'm again not talking here about analyzing minute charts or hourly charts, but long term, where technical analysis can really help you determine, is this going to be now a break of structure, or are we going to see a continuation of this trend? And obviously, what we saw here is we were deflected one time. We never closed above this. So it was just good to assume, if we don't close above this, this is probably going to continue all the way. And by the way, we bottomed out here exactly at the 0.236 Fibonacci level also. This is so powerful. No? It's so simple, but you can use here technical analysis to kind of get a better timing for your entries on, and also, of course, for your exit points, for your trades there.
Yeah, I believe that, with the, obviously fundamentals and the overall macroeconomics of the world is telling you why the market should be moving, and then the technicals can find entries for that. But let me bring up my chart here.
Yeah, sure.
Quickly, and I'll. I don't know if you guys remember, but this is a mistake that I did. I was way too early on this, but this is the election, and this is on inauguration. And I had this idea all from the election. I said, I'm going to sell Euro USD on Donald Trump's election, and I'm going to be buying on inauguration. And what happened was, I got my entry here, and then if I sold here, that would have been around 500 pip move to the downside. Absolutely crazy. Now, unfortunately, I did sell, around here, which was close enough, still quite close. But what I need to focus on for me personally is if you're trading the bigger moves, if you're trading the cycle moves, then sometimes you even have to put more emphasis on the weekly chart, and I look at the 4 hours for entries, but that's about it. Then I ignore the 4 hour. I look at the daily and the weekly, and I have my idea of getting a move up here, and I'm going to be holding this position until the daily structure is broken. And I believe that's where, as a trader and investor, that's where one of my strengths are. I have high patience in my trading. I like sleeping, with my positions open. That's like, I like the feeling of waking up and like, I wonder what my positions are doing. And I go to bed, I'm like, I feel relaxed knowing that I have my money working for me in my sleep.
I mean, it was a great analysis as well. It was a great trade too. In a hindsight, of course, it's always easier to say like, oh, I should have exited there, but you never know. We could have closed above that and then go up again. So that could have been the turning point as well. And I think for me, it's like sometimes I need to be more patient, honestly speaking, because one thing I hate is like when I see, oh, I have this trade here, long-term trade, where I'm deep in profit. Let's say like in this case, I'm already like 200 pips in profit. It's in the right direction. It's like with a swap, this trade as well, because, US dollar interest rate higher than euro interest rate. So you probably get a couple of pips every day in overnight fees there as well, at least if you're trading with a good broker. And still for me, it's like, I hate seeing like, I'm like 200, 300 pips in profit. And then suddenly it starts moving against me, and I maybe stopped out at break even, or maybe even with a little loss. That's for me the hardest one. Yeah. It's like I'm get incredibly angry at myself when something like this happens to me. But I also found out there's like no easy solution. Sometimes that happens if you're aiming, on those 500, 1,000 pip moves.
I think the easy solution is just not is the easy solution is to look at your if you're going to be trading this way, if you're going to be a swing trader, look at your open positions just in the same way as you're looking at your long-term investment portfolio. Like with my long-term investment portfolio, I can't just get out of a index fund the same day. Like I have to put in a sell
Mm,
order and then it gets activated the next day. So I can't just get out of it directly. Like, and it's a lot of money. So I have to be like, you can't just get in and out. And I think the solution to that is look at your swing trading positions in the same way and put alerts on TradingView, like at what levels am I interested, and then you put alerts and then you don't look at it, you know.
absolutely, yeah, yeah, absolutely.
I think
And it's also a nice. That's why I had to smile just now when you said I like sleeping. It's nice, walking away from your charts, because when
yeah,
you then look at the charts, it gives you a little bit of a new perspective. I noticed that if you like stare too long every day at the charts, I kind of get this phenomenon that I overinterpret individual candles too much. But I think that, oh, that last candle, that changes everything right now. When in reality, it's
exactly.
just a normal move into the direction I wanted. It's just a temporary pullback. It's just a normal market structure we are seeing there. And this is really where I always say, like the German saying is where, like, you are staring at a forest, but you cannot see the forest because there are too many trees. There's too
Yeah,
much information. That's why your brain cannot see the obvious anymore. It's obvious there's a forest, but you cannot see it because you're too focused on the individual trees. And this is what is happening there. Luckily, over the years, I kind of also came to the realization I don't need to sit here for 10 hours or 14 hours or 15 hours, which I used to do every day to stare at charts. I can spend my time with other things, be it spend it with my family, or spend it on hobbies, or spending it even on other investments that I have in companies.
yeah, on a lot,
And
or here with me on live stream.
oh,
But I guess
on the
this
live stream
is
with you,
yeah,
where we
yeah,
are also
exactly.
talking about charts.
Yeah, no,
How long have
definitely.
we been online already? Oh,
I
it's
think I
already
think
57 minutes. We should
uh,
slowly, I think, come to an end.
I think so too. I think so too. So, okay. So my you asked me about my prediction for 2025.
Yeah.
I kind of already somewhat outlined what I think is going to happen in the next couple of months. I think we are seeing a reversal in the forex market. I'm not sure, of course, how this will look if there's a recession, but I think we are going to see a recession sometime this year. I'm not going to talk about timing because timing is impossible. I mean, might not even get it this year, but I think we will. But what I'm doing is I'm preparing. I'm like you. I'm averaging out of my positions, not averaging in. And when I say averaging out, I'm averaging out of my long-term investments, my investment in the stock market, in my index funds and my long-term investment. I'm getting out of those slowly but surely, and waiting for a market up because the returns I've made on those, I got in at the very bottom. I started investing like just like you, started investing very very early in the cycle. So the returns are just an outlier. It's just not really. Um, Healthy returns, I believe. So I should be selling. I should be selling,
Mm-hmm.
and so that's what I'm going to be doing. And I'm preparing for possible recession, and of course the major shifts in structure that I believe we're seeing in forex right now. I think those are going to last up until that recession. So if you look at the top here on Euro USD, this is on the dailies. We're going to draw it like down here. That's 90. That's 137 days. I think we're going to see something similar here, where we're going to see a move here from around this level, and I think that move will play out before we see that overall market
Mm-hmm.
top. Because obviously a market top or recession will change the whole dynamic of the whole markets, right? And I
After
think,
this, we should see the dollar getting stronger actually again.
exactly.
Yeah.
And
if it doesn't happen, we are talking about like the euro dollar potentially trading at 0.9 or 0.8
Yeah.
if we don't see that move, which would be
Exactly.
insane.
So I don't think that's going to happen. But and the contraction phase is usually quite short. The contraction phase of a recession or a credit cycle is very short. People talk about, we're going to get multi-year bear market. That we almost never get multiple. We get like 3 to 6 months. So 3 to 6 months of contraction. Yeah.
Just say something to this. We do have multiple year bear markets. We're just not used to it anymore. We haven't seen a multiple year bear market since the .com bubble. So I'm talking here 2000, what was that? 2000, 2001 to 2004 or 5.
Yeah, and I think the market is more effective now.
Also one thing that I really am a little bit critical about, all these people that are in positions of power within banks, for example. At the moment, you usually have people there who maybe like 10 or 15 years in their career, and they are kind of summer children. They don't really know how it feels to be in a market that goes down for 2 or 3 years. And it was the contrary for me, because I grew up during the .com bubble, so I was like a super bear. Took me very long to accept like markets actually want to go up, and when it goes down, it's a good time to invest. Really long. I missed out multiple years on good performance on the stock markets because of that mindset. And we're going to see that mindset in the opposite direction. I'm not saying that we're going to get a multiple bear market, because there is still a lot of liquidity printing on. That liquidity needs to go somewhere. Naturally, it goes to the banks. Of course, they are supposed to spread it. They're spreading it to the rich, because those are the ones getting the credit lines. Those are investing in stocks, real estate, and so on and so forth. I don't know what will eventually break the cycle there, if it's going to be a revolution or whatever. But as long as that works, we're not going to see like 3 or 5 years of a severe bear market where stocks plummet by 60 or 70%.
I mean, we've had the financial crash, we've had the COVID crash, and we did not see multi-year bear markets. So it's what needs to happen is something extremely severe, I believe, for that to happen. Maybe, the dollar losing its dominance, something like that might actually change. Or, could be that the BRICS nation is getting momentum, or Russia, something like that. I think we need to see it, but I don't think that's going to happen in a very long time. So
yeah. Maybe it's like 10, 20 years, if at all, years down the road, but not like in the next 6 months, year, 2 years, 5 years. Exactly. So in summary, I think I remember you also saying like you also think like probably around August, if I know you don't want to time it, but understandably, but this is like maybe the beginning of a time where to get then extra cautious slowly,
Yeah, and look at this, like the timing I did of this EURUSD move right here, that is in May of 2025. Now we have August is back here, right? So that's August. Now we could easily extend this, like we could easily see a move up here, and then a move all the way down here for that move up here. That is very possible as well. Yeah. So it's August is definitely a good time. I would say just around summer, summer of this year, we have to be very cautious.
Yeah, couldn't agree more, really. Yeah. I mean, we haven't talked about this before much, but it's like, I think if you would watch my video of the live stream where I laid this out, you would be like, hey, did he copy it from me? What happened there?
and it's not just me and you that is talking about it. I've seen some quite respectable traders, not analysts. Like there's a big difference here, right? Actual traders making money and putting money where their mouth is having very similar thoughts to what we are talking about here. So that also adds some to that. Now, the closer we get to this, we're gonna see the banks putting out statements on this as well, I'm sure, because the closer we get, the more obvious it's going to be to become. Because remember, the top, we will be seeing a lot of data lining up to this if we get this. And like the confirmation is obviously going to be happen after the technical top. I mean, a 2 consecutive losing GDP for the USD, that's going to come in after we see something like this technically,
because it's a lagging indicator. It shows you the past. It's not really worth like to time your investments, let's put it like this.
But it's a good data to say we told you so. Right?
Yeah. Also nice.
Yeah.
Nice. All right, guys. I think that's it for today. Already, I'm tempted to say, but really an hour, but that passes by in a breeze. Always thanks for being with me again here and doing this. Looking forward to many more shows with you. Hopefully
Definitely.
more frequent again on a Friday. We both always have a busy schedule, breaking our legs, getting the flu and so on.
I think it's nice to take an hour here just to kind of break down, or I see it as a way for me to kind of break down my my weekly outlook that I have here on the markets.
Yeah, it definitely is. I hope you guys had fun too. If that was the case, please leave us a like, subscribe to the channel. Happy for you to tune in again. If you like something like this, tell it to your friends, your family. Maybe they want to tune in. We're just sharing our outlook, of course, here. No financial advice. And have a good weekend. It's Friday already. I'm so confused because I was sitting in the plane like 24 hours and my brain is still foggy from jet lag today somehow. So have a good one, everybody, and see you again